Hello and welcome to another update video about Link. So Chainlink chart is currently following the wave count nicely. It's cooperating very well with our main scenario, which was that we go ideally a little bit lower into the support area. Yesterday, when I made a video around the same time, Link had not yet reached our support zone, this opportunity zone highlighted in orange. The most recent ones were all respected. At some point, surely this structure will break, and that would be our first signal that the overall uptrend here that started in June is completed. That doesn't mean that the long-term uptrend is completed, or the one that actually started. Okay, it's just that this entire move up, which is an uptrend, a 5-wave pattern, basically completed or nearly completed Elliott wave structure, that it will complete. Basically just watching for a signal that it is completed, but my preferred interpretation is that we get one more high. Reason I say it could be complete is we already reached my ideal target, or let's say my minimum target. It was at around $21. It was just below 21, as you see here, $20.90 pretty much. That level was pretty much reached, and we now see a pullback. I prefer one more high in wave 5 of 5 of 1. Possibly towards $23.78 to maybe $29. But it takes obviously some evidence to suggest that this is not going to happen, and it would be a break below micro support, which we're going to talk about in this video. Until that happens, I assume that we should see that one more high. The idea is obviously that from the June low, a 5-wave pattern to the upside unfolded, and the 5th wave should get 5 waves. We only have 1, 2, 3, 4, and then just in need of one more high. I can always be wrong about the wave counting. That is to a degree subjective. What typically doesn't lie are the fibs, the Fibonacci level. So let's zoom in, because they are objective. So you can always be wrong about the micro structure, because there is not the one count. A lot of people are looking for the count, the one objective truth, which doesn't exist. It's not an exact science. It's more like an art, or a combination of art and science. It's not an exact science. So that's why we use mathematics, which are the Fibonacci levels, to guide us in addition. Okay. And what we typically say is, okay, the idea was this is a wave 4. The idea was, yep, this pullback was a little shallow. This rally might have been a B wave. Ideally, we come down in wave C now, which is sort of what we see right now. And the idea was that we go into this support zone, which we've done. So the ideal target is normally the 38.2 retracement, which is this $17.67 level. That's basically the level that most frequently fourth wave corrections reach. And I highlighted to you that, okay, it's obviously possible the wave 4 is over here, but it would be a little bit shallow and a little bit less deep than ideal. Now actually we have nice, if you see this, nice proportionality between waves 2 and 4. We obviously have this larger price channel. What we can do in addition, we can try to see if we can add an additional channel to the chart that might give us a little bit more indication of where the wave 4 might finish. So it's this channel. Pay attention to this channel. It might help you find the low. And it is very close to that $17.67 level, the 38.2 retracement. Just something to watch, not super reliable, but if we have the waves 1 and 3 already completed, we can use a parallel trend line to determine where wave 4 might finish. And that's exactly what I've just done. So it's worth watching for that. Until then, obviously the trend is down locally now. So I'm simply using the fib levels and those trend lines to watch for a reaction. It takes, however, some kind of a signal to suggest that the low is in. Best signal would be a break above the B wave top. That's here at $20.40. That would be, let's say a more or less reliable signal that the wave 5 has started. It needs to break ideally in 5 waves. Better would be obviously the break above the February high, which was, pretty much at $20.90. So that's what I'm watching at the moment. I see this only as a pullback. It's a pullback only in 3 waves. And what we can use in addition is the Fibonacci extension tool, so we can measure the length of the A wave, then we go to the high of the B wave, and there is, basically a target range for a C wave. This basically ranges from where the current price sits down to that $17.67 level, which is the 1.618 extension. So just pay attention to these levels. $18 is another one. Micro support, I would call them. And then it's just worth watching for a reaction in this region, okay? Which obviously cannot be guaranteed. And obviously there is no low in place until we see a first micro 5-wave pattern, something like this, which happened between the 25th of January and the 28th of January. Yeah, that's my update about LINK. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.